Hey, he's back. Yeah, crazy, I know. No, I've got, would like to welcome everybody. It's been a while. I missed you guys. I tell you, this is Craig Modelmog for the week ending March 5th, 2021, Wall Street X's and O's. Quick disclaimer here, the views and opinions on this show are mine. They are not meant to be an offer to buy or sell anything. Investments can and will lose money, as we know the last few days, and they are not FDIC insured. So anyway, it's good to see everybody. I definitely have missed you all. I would like to start today out by thanking everyone for their kindness, for your unbelievable support, your prayers, your cards. You guys have been off the charts. It's pretty amazing. It's just something I don't know, I don't expect. I love doing things for other people. I have a hard time letting people do things for me, this has been a great learning experience the last 5 weeks. For those of you joining me for the first time, I came down with COVID. And just to kind of give everyone an update here, what ended up happening? I've had a lot of people say, Craig, what the heck? What happened? I had a partial temporal, which is the left side of your brain, seizure as a result of COVID-19. Landed me in the hospital for about 3 days. I had amnesia. I couldn't speak. I couldn't talk. I couldn't communicate. It was kind of a scary deal. Tanya was still in COVID lockdown, so she couldn't even be there. Thankfully, my kids did come out and hung out with me. One of my best buddies, Kevin, hung out with me one day, has some good stories of how ridiculous Craig was in the hospital. Not that I need any help embarrassing myself, but you know what? Sometimes I can't help it. Really, I couldn't back then. But all's well. I got the clean bill from my speech therapist, from my neurologist, which is cool. The biggest thing is they say, Craig, the fatigue component is going to be something you got to deal with for a while. And they said, particularly because of my seizure, which they think was really caused by COVID. She said it's unlikely that I would continue to have them. Prayers I don't. But she said, really take it easy. So I am. I'm working half days now, as most of you know. I thank you for your patience and for cutting Tanya and I some slack. As you all know, it's just the two of us. But we're doing good. I'm feeling better every day. Trying just to get a lot of rest, stay healthy. And you know what? I would encourage you all to continue to be safe. This hits everybody differently. I'm a 53-year-old guy that exercises every day, eats right, does all the right things, and it just didn't matter. So, you know what? But anyway, we're going to jump into it. Wow. You know what? I'm fatigued with that, and I feel like I just ran up and down the basketball court as fast as I could, which I'm not very fast anymore. But anyway, here we go. We're going to dive in. It is going to be a short one. It is about 1:32, and usually by 1:30 to 2, I start fading. But we're going to get this out today, and it's going to be good. And like I said, it's great to see you all. But I'm going to hit on unemployment briefly and catch everyone up there. We're going to talk about household savings, which has been pretty interesting. Oh, side note, if I start not being able to talk or ramble using words, letters, sounds that don't make sense, I'm having another seizure. Call Tanya. She is at home working on Fridays, and let her know. And if you don't, you just want to see me really blow this thing up, then enjoy. So anyway, on top of household savings, we're going to talk market update, and I'm going to bail. So anyway, unemployment. This is positive, okay? We reported a uptick. This was jobs added, non-farm payrolls of 379,000. They were expecting 200. I like those numbers. That's like a really good deal. Okay. You look at other unemployment numbers here, just to rattle these off. Initial claims went up by 9,745 people for the week. Continued unemployment claims actually dropped by 118,000 down to 18,027,000. These are positive things, people, that I like to see. These are things that as the economy begins to, or I should say, continues to reopen, What do I talk a lot about? Rate of change. How quickly are things accelerating? All right. We know Florida's been open. Texas and Mississippi just said we're opening up. Okay. Good, bad, or indifferent, I don't know. I'm not here to point fingers. I'm not a scientist. I am not an epidemiologist or an infectious disease specialist. See, I am back because I can spin some words. So, but we're going to see. We're going to watch that. But I would anticipate unemployment to continue to tick down. I would continue to see jobs growth be on the plus side. I'm anxious to see how we accelerate. That's going to be fun to watch. Okay. Household savings. This is kind of remarkable, actually. Okay. Since COVID, how much, and see, I'm rocking. I'm back to all these bad habits because I've been out. I've not been in front of the camera for so long. So we're going to sit in here, Jim. That's for you. Good friend of mine say, Craig, quit your rocking. You make me dizzy. So, you know, we're sitting in there now. I'm feeling it right at the moment. But anyway, household savings during COVID, 1.5 trillion with a T. That's a big number. Okay. That's a big number. That also is going to lead into the markets and what I think on the short run we're going to see here. So let's jump into the markets. This week, I've had a few people start to freak out. Come on. It's a few down days, people. We're spoiled, all right? Market's up 555 points at the moment. It's going to be fine. This is what they call an episodic non-trending market pullback. Episodic means it's an episode. Means it has not broke trend. Trend has not changed, at least overall in the broad market. There are parts of the market that are weak. We don't have exposure there, okay? So this is episodic and non-trending. If you go back to 2013, do you remember a thing called the taper tantrum where the Fed came out, so they were going to look at changing policy? Oh, the sky fell. They were worried, oh my gosh, interest rates are spiking higher, inflation's going higher, the market's growing. What is an investor to do? Nothing. It's garbage, okay? You see these little bit of a pullback in the markets. It's normal. Here's the difference. We are at a different place here. That's what you people have to remember. Lots of people talk valuation. Oh, the market's overvalued. Garbage. You can't just use valuation as your measuring stick. Here is why, okay? When you look back 2008, off of 2007, we had a market at peaks, economic peak of the cycle. If you go back to 1998, 99, wow, we're going back past the year 2000. Yeah, that was the tech wreck. That was the dot bomb. That was the big tech bubble. Lots of fantastic names came out of that. Again, market cycle high. People, right now, the denominator, math lesson here, numerator, top number, denominator, bottom number, right? The denominator now is different. Why? We are coming out of one of the worst and most quickest, swiftest market shutdowns on record, okay? We're down here. All these other instances, we were towards market or cycle highs. That is a massive difference, okay? You have to remember that. Are interest rates going to continue to go up on the short run? Most likely. Is the US dollar going to continue to depreciate in value? Most likely. Is inflation going to continue to rise? Most likely, okay? But here's the difference. We have an economy that is on the beginning stages of a reopening. Okay, what I say at the beginning, Texas and Mississippi said, forget it, we're opening up. You're starting to see that. People are getting vaccinated. See, I'm not quite back. That's the first one. I about fumbled earlier. I faked it. Yeah, I can fake things. Anyway, people are getting vaccinated. You're seeing that happen. You're seeing the number of cases drop, all right? We're getting into the nicer part of the year. We're getting through a cold and flu season, okay, when people are cooped up and inside. These are going to help the numbers and going to help also the economy, because what's going to happen? Businesses are going to start reopening. You're seeing capacity get expanded in restaurants, in stores, all these things. People are going to begin returning to a more active life. Are we going to get back to normal? No, I don't think that's a while off. I think that's a couple years off personally. And I'm not going to get into that today. But things are going to accelerate, okay? we're going to see people start spending money. What did I say about savings rate? 1.5 trillion. That's a big number. Okay. We're Americans. We are not savers traditionally. We are spenders. If you look at our GDP, gross domestic productivity, which measures how quickly our economy is growing or contracting, 70% of that is spending. Okay, we're a spend economy. We are going to return to that. At what pace? Don't know. That's the kicker. That's why I talk rate of change. So as things begin to accelerate, what is Craig watching? At what rate are we accelerating at? What's the steepness of the curve? That is basically calculus. It is also geometry. Didn't like geometry way back in the day. I kind of like it now because it makes sense now. Arnold Torgerson was my geometry teacher, Fort Collins High School. Rest in peace. He passed away, I think, last year. You know what, Torgy? Didn't like your class. Me and Robin Deal used to hang out. We got C's for just showing up because Torgy liked us. Anyway, I digress. So anyway, that's what I'm focusing on, all right? With this turbulence we've had, I've been rebalancing into that. Some of you have probably seen, going, geez, what's Kreger doing? Well, it's called sell high, buy low, all right? These are great opportunities. I'm taking an opportunistic approach. Why? Episodic. What does that mean? This is just an episode. It's like watching one episode of the Goldbergs. Love that show, by the way. Or Last Man Standing. Yep, I like it. Or now, trend remains intact. So remember that, okay? Another thing, last couple things here. Market volume for the last month, volume has been down 23%. For the last 3-month average, down 3%. What does that mean? The big boys haven't been playing in this pool to their fullest extent. All right, we need to watch that. So I'm going to watch volume. I'm also watching VIX. VIX, it's down 4.07 today, trading at 24.50. I watch that a lot. I would not shock me to see the VIX drift back down below 20 and us set a new high by the end of the month. So for March 5th, I love you guys. I'm glad to be back. And this is Craig Modelmog for Wall Street X's and O's. And I'm back, baby. See y'all. Love ya. Bye.